welcome to week 3, lesson 1 of the Store Manager Academy. Today's lesson is understanding financial statements. Now, I had prepared a lot of different information for this training, and then it dawned on me, where you're at right now in your career, most of you are new into management, and a lot of you are even assistant managers working your way up to store manager, and many of you are working for organizations that don't really give store managers a lot of access to the financial statements, which I think is stupid. Okay, you should have full access to your financials. Every single penny that goes in and out of your business, you should be able to account for and to be able to measure it. But for some reason, some organizations think you're not smart enough to use this information, to look at this information, and they don't want you, they think, they can't trust you that you're going to share, that you won't share how much you're spending in advertising for your store and how much you're paying on this and that, and so they don't trust you with the information. Again, I think that's a horrible mistake, and any organization that's doing that should stop it now. But for those of you that, whether you have access to your profit and loss statement or not, this training is going to help you, because when you do have the ability to have access to your profit and loss statements, your cash flow statements, income statements, all that fun stuff, you will be able to use that information to actually draw actions from. That's the whole point of looking at these statements, is to be able to use this information to better the business, be more efficient in the things that you do, improve month over month, year over year. So I am just going to really focus on the basics of P&L. A P&L is an acronym for a profit and loss statement. And it's similar to a cash flow and income statement. And a lot of times a P&L has everything on it. And so I made this form right here just as an example. We're going to just consider it as a P&L, all right? And there's two portions of a P&L that you need to be aware of, okay? Number one is your income section. That is money coming into the business from mostly product that is being sold in your store, okay? This revenue line here, when you see it on a P&L, that's revenue. So if you sold let's just say a brand new TV out of your store for $479, you just added $479 in revenue income to the business. So what we're looking at here, January 2017, okay, revenue $120,000. That was products sold. Total revenue for the month of January is $120,000. Okay, these other things like returns and allowances, interest and income, I don't want to go into detail and really talk about them. You should be able to have a GL breakdown on any P&L that you're looking at. A GL is general ledger code, so it'll tell you what the returns and allowances are, where they came from. Every organization has that breakdown. Now, whether you have in collections, accounts receivable, whether you have access to that is a whole nother question. But I would certainly request it if you don't. Like, hey, I'd like to take a look at my P&L for my store. Especially if you talk to your DM about that, man, your DM will be really impressed with you that you want to break down the P&L and understand it, the profit and loss statement. So total income, okay, $115,000. Don't worry about this total cash available. It's just I'm integrating both a cash flow statement and a profit and loss statement. But that's total cash available on hand based on the beginning cash balance I had. I don't want to get you lost in that. That's why I'm not focusing on it. So income is actual money coming into the business from product that you sell. That's why a lot of your DMs will be highly focused on driving revenue. They don't care so much about gross margin, even though you might be making 5% gross margin on a $5,000 ticket. They want that revenue. They want that $5,000 revenue, even if you only made, let's just say, $10 profit off of it. Okay, I know it's an extreme example, but the way the corporate world works is they want you to hit your comps. They want you to do better last year. They want you to do better over last year, over last quarter. Always see a path of growth, and that's why so many upper management focus on revenue increases. Now, in an ideal world, they would want gross margin to increase as well. And if you're in some of the larger chain stores, you'll see that they measure margin very closely, which is a good thing. You could be down in revenue, but be up in gross margin. And gross margin is gross profit. Gross profit is what's left. Sorry, my phones are like beeping like crazy. Gross margin is or gross profit, gross margin, same word, same thing, is what's left after your cost of goods sold. See that? Okay. So if I did $120,000, okay, in revenue, my cost of goods sold out of that revenue was $50,000. I have the rest remaining in actual profit. So that's $70,000. Hold on, did I get that math right? $70,000 in gross profit. And now the rest of my expenses that are right here under expenses are going to come out of that $70,000 that's left in gross profit. So again, you have your income section, that's revenue from products sold. Then you have your cost of goods sold. That's usually your first deduction. I should have put that up at the top. I apologize, but just bear with me. Cost of goods sold is your first expense. That is the expense of the product that you sold. You have to take the cost out of that factor, right? And then you're left with the gross profit, a gross margin of about $70,000. Then you go in and start taking out all of your other expenses. And that's the second part of a P&L, a profit and loss statement, is your expenses. That is what comes out of your profit, okay? So I just made up some categories that you see on general P&Ls. Advertising, $10,000 right there in the month of January. Commissions, $2,000. Insurance, $1,000, blah, 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 right? The most important expense, though, is labor, right? Wages. So $10,000 out of $120,000. That is, payroll is usually the biggest expense you have next to like the lease of the building, okay? And your cost of goods sold. Jeez, my phones are just beeping like crazy. Wages is your largest controllable expense. And the reason we call it a controllable expense, okay, is labor is controllable, right? You can control how much labor you spend or not spend. And it's one of your largest expenses. So you need to watch your labor closely. That's why you always have those, emails being sent down sent down from your boss saying, hey, you're overspent this month or this week on labor. What are you doing about it? That's because more than likely you're not hitting that revenue that you thought you would. And so all these expenses that just come out normally, like $20,000 monthly lease, that expense doesn't change, but your revenue did. And so now you're not making as much money. If you can see in this scenario, $120,000 revenue with all these expenses, we're left with a net income before taxes of $7,700. Think about that for a minute. You did $120,000, and this, by the way, I try to give a real life example of a store. So this is mirroring a store that I know of. I got some expenses from them, talked to them about it, but think about this. Think about this for a second. $120,000 in volume in 1 month. And after expenses, okay, that's including the cost of goods sold, the cost of the product, they were left with $7,700. Out of $120,000, their expenses were $108,000. This is typical, by the way. Just keep this in mind. This is pretty normal. So that's why you as a manager need to be able to understand your profit and loss statement. You need to realize the consequences of not hitting your budgeted goal. Budgets are set well ahead of time, at least a year ahead of time, right? And they're saying, look, based on this budget, you have to hit this goal to meet all your expenses and to leave a little bit of profit afterwards. You want that profit to carry over into the next month, because that'll help you if you ever have a bad month. And as you can see, it didn't help this store very much. Well, look at this, all the way down to $72,000 net loss. Okay. And then they made it up in December of $201,000. So you'll have your highs and lows, but know that that's why you have these budgets. That's why you need to be working hard towards your revenue goals. That's why you need to be working hard on controlling your controllables, especially in your expenses. Salaries, supplies, and maintenance are your biggest controllable expenses. If you can see, they're pretty close to each other. Supplies, maintenance, and wages, okay? Those are your controllable expenses. You can control your electricity bill, right? You turn off a light when you leave a room. Don't have running water 24/7. There's lots of things you can do. This is why the P&L is so important, the profit and loss statement. Break down every category and see how it affects your business. And always, if you take my next course here in this same week on retail math, you'll learn that I have a saying in there: if in doubt, divide by sales. So if you want to know what your salaries are as a percent to sales, so our wages for this month is 10 grand, right? And we did 120,000 in revenue. So I'm going to take that 10 grand, okay? I'm going to divide it by 120,000. Oops, calculator just wigged out. That's an 8.3% salaries as a percent to sales. And you want to do that with every category. So I want to figure out my gross margin, cost of goods sold, 120,000 minus my 50,000. That leaves me with the $70,000 profit. I divide that by 120,000. Okay. I'm making 58 cents on the dollar for all of that's my averages. I'm making 58 cents on the dollar profit, gross profit. That's really good, my friends. Those are great margins to work with. So at the end of the day, I didn't want to make this too complicated. And if you have specific questions, let's talk about it on Facebook or on the weekly conference calls. But just know that the P&L is absolutely vital for you to be successful. You have to understand, let me rephrase this. You have to understand your profit and loss statement. You need to know what's going on in your business, every penny coming in and every penny going out. If you are not measuring every penny, you're going to struggle as a new manager, even as a tenured manager. I hope this helped you. We'll discuss maybe some advanced strategies in the bonus section of the 5-week academy. For those of you that are pretty fluent with the P&L, I'll really go into some advanced strategies of using the numbers to forecast some issues that are coming your way that you may not see, but they're right there in the numbers. So look for that in the advanced. It will be an advanced training that we'll do in the bonus modules. Thanks for watching thanks for watching this lesson. I look forward to seeing you in the next one.